Hi, this is Matt Amberson, the principal of ORATS. This video is a follow-up. We've already identified a company, SANM, that might be a good earnings move, and we want to look at it in terms of what the dashboard is saying here. So the dashboard is a GUI that shows graphically where the implied, statistical, and stock price has been. But we want to come down here and concentrate on the earnings table and the fair vol at earnings calculation. So basically the earnings table down here will help us calculate an earnings move, how much in percentage terms we think the stock will move on earnings, and then the fair vol will be taken from an interpolated out month implied volatility. Here we calculated it at 54.48%. July is 54.2, October is 55.3, so we're going to interpolate that about 90 days out. May is higher, which we normally see in these stocks that move a lot during earnings. We're trying to calculate what this May vol will fall to after earnings. So what we'll want to find is how much the stock's going to move around on the day of earnings. So we see that earnings is 426 after the close. So when we look at history, i.e. the last earnings was 126, and after the close we calculate the movement in percentage terms. The day before the close it moved up 6%, and the day after earnings it moved up 15%. In November it moved up 5% and up 25% after earnings. July 4% and 23. April of last year up 14, down 17. So what we do is take an absolute value average of these moves, and we find that the average absolute move the day of earnings is 6% and the day after is 17%. So we think tomorrow it should move around 17%. So what we can do is then take the fair value, 54%, and assume that the stock will be valued there, with 25 days left, or move at 25 days at the fair value. And then the one day it'll move at 17%, and that's how we get this 77.99% fair volatility. Now if we lowered this to, I don't know, 40% and still maintained a 17% earnings move, that's still 69%, which is higher than the 59.93. So that still looks like a buy here. As a matter of fact, let's just see what some look like. So 10 is a sell, 15 is a slight buy. So something around 12.5, 13. So you can see it's kind of nice to be able to manipulate these numbers and see where you would break even. It looks like about, if May fell to a 40 vol and the stock moved at 13.5%, if it has that big of a move on the day after earnings, it would still be about break even. So that's how to use the ORATS dashboard to analyze a stock around earnings, looking at the earnings table and using the fair vol calculation, comparing that calculation to the implied that's in the market. Thanks for your interest in ORATS. My email is matt@orats.com, matt@orats.com, should you have any questions. Thanks.